Fed one and done?
Yeah, look, we think they have one more rate hike left in them in May. And keep in mind, in their dot plot back in March, they indicated a 5.1% terminal rate. That does implicitly imply perhaps one more rate hike ahead of them. And keep in mind, the market is also giving them one rate hike. Despite somewhat better inflation numbers this morning, we are still seeing about a 65% probability in markets for that May 25 basis point rate hike. So we think one more rate hike. The question you had after that, what happens next, I think is the interesting one. And we don't yet see the scope for rate cuts. And in fact, in order for rate cuts to start getting signaled by the Fed, we think we'd probably need to see one of two things. Inflation moving more meaningfully towards that 2% goal, maybe it's 3% or so, heading towards 3%, or the economy more meaningfully moving lower, seeing some real signs of weakness. Neither of those conditions we think are in place yet.
Mona, good morning, it's Guy. So we get a hike and we get a hold. If that's the case, if you're right, the bond market is mispriced and the equity market is mispriced, potentially quite significantly. How much volatility are we going to see?
Yeah, look, I do think that we are headed towards a period of economic softness. In our view, the base case remains for a mild recessionary environment. We're seeing it starting to show signs in things like the ISM we saw last week, even the labor market starting to show some signs of softening, ADP data, for example, and then the housing market cooling as well. So we do see an economic softening on the horizon. We don't think equity markets really can just whistle past that graveyard. We think we will get some volatility. Bond markets, interestingly, we do think, while they have priced in probably about 3 rate cuts at this point, we do think the Fed has the potential to signal, at least by year end, that they may pivot lower towards rate cuts. So perhaps they have to take 1 or 2 of those cuts out of the system, but not a dramatic move on that end. But we do think equity markets have some volatility ahead of them, but hopefully that's the period of opportunity ahead of a more sustainable recovery.